Sandip Sabharwal is ready, and where is the umbrella? Monsoons have come early. No one's managed to get umbrella, no raincoats. Even the shopkeepers were not ready. Saying the rains have come so early this year, Sandeep.
So you make a rule that all interviews on rainy days should be with umbrellas or raincoats.
As long as it's not rainy days for markets, I'm okay, right?
Rainy days are good now for the markets.
So what is in store now? We've had a good rally, some amount of consolidation. Are we likely to pick it up, or we will consolidate for a few more weeks before we pick it up?
I think there's no reason to be negative per se. So I think that's the base case. So once you have a view that there's no need to be negative, then you have to look for opportunities to buy into stocks or sectors which you think could provide opportunities. And I think that's what should play off. I think like the commentary, like the discussion you are doing prior to our interaction. I would agree that inflation will undershoot RBI expectations, and that will give them a lot of leeway to conduct monetary policy in a way where economic revival gets entrenched. And once the economic revival gets entrenched, I think the good cycle should last for a few years. The second part for global flows is that what's happening on the US dollar is very important, and that's something which people should monitor, because I think US dollar is entering into another leg of a downturn, which could take it even 5 to 7% further down from where it is, the US dollar index. And such moves are typically bullish for emerging market equities. And we've seen such many such cycles in the past. So I believe that itself will get in money into emerging markets over the next few years, a few months. So trend is positive. Markets are not cheap, but in bull markets are not cheap. So they get cheap during corrections, and those corrections need to be bought into, as we saw earlier during the year. And the people who are still waiting for a very sharp dip, they might be disappointed.
Let's pick up on some of the individual counters. And Sandeep, want to discuss Eternal. And I think we were speaking about this last week as well, as to how it's just been consolidating and stuck in a range for a while. And now the fact that it could see outflows of about almost $840 odd million because of both the MSCI as well as the FTSE weight reduction. What's your opinion here?
The outflow was already factored in when they took the decision to slash the maximum foreign holding to, I believe, 49.5%. I think that news flow got factored in at that time only. So this is not new. So they have announced now, but most of the analysts had already calculated this outflow. So eternal benefits due to it being part of the main index now. And to that extent, when the index moves up, so there is a higher correlation, and it also does well. On the other hand, on the business front, I am very skeptical on whatever they are trying to do on the and I've said it many times, the kind of investments they are making on quick commerce and the return potential there. So now, if they are right in what they are doing over the next 2, 3 years, then there could be another round of significant value creation for shareholders. But my base case would be that the kind of money they are putting into that business, the returns will be very, very low.
Chandan Tapade also joins us. Chandan, what is in store for the week? Are we in for a good week of trade or another week of boring consolidation?
Good morning. Thanks for having me. So I think good days might be there as we are heading towards the monthly expiry. So because of that, some roller coaster ride could be there in the market. The good part is that index was making lower highs in last 4 or 5 days. Yesterday, on Friday, it negated the formation of lower highs, and because of that, again some downside will be kept, and market will attempt for 25,100, 25,300. So I believe that 24,600 on immediate point of view and 24,444 on positional point of view will act as a major support to surpass the recent swing high. And the good part is that now, as you started with monsoon talk and the rainy season, we came out with the monsoon report with the view that that will trigger to the positive And in fact, selective sector, including chemical, fertilizers, or auto, could be in focus apart from financial counter. So that's on radar, and I think market could see the positive sentiment and an attempt towards 25,000, 25,200 kind of levels.
Anything late is always bad news. Anything early is not great. Monsoons are 15 days early. And 15 days early in a city like Mumbai, I can say that, okay, thank God, it's raining. But it will have impact. It will have impact on a lot of sectors: cement, air conditioning, power, a lot of other allied sectors, Sandeep.
Yeah, so I think demand for summer products will suddenly collapse. Then that includes the power demand also. So a lot of the merchant power producers also could see much lower rates as monsoon sets in early. Now, the key to bullishness or bearishness about the monsoon also is how the spread in and how long so whether it continues the way it started. And I think that becomes very important because for the crops, actually the month of July is the most important. So because the sowing etc. happens early, and July is where rain should be good. And that's something which needs to be tracked before everyone becomes ultra bullish on the monsoon starting early.
Okay. Sandeep, so what is the basic approach in this market? Use the decline to buy, stay invested, don't wait for the decline. Markets are looking vibrant, but they've also run up. If you buy now, you run the risk of running into a correction. And if you don't buy now, if markets go higher, you feel bad.
The main thing which people, so I think whoever is invested, they shouldn't be selling unless they are invested in the wrong kind of stocks and they want to switch to some other stocks. So that's one part. For people who want to buy, the main thing which should be considered is that are markets likely to have a sharp dip anytime soon? And that looks unlikely unless and until, let's say hypothetically, the Indo-US trade talks break down and then those tariffs come up and etc. So I think those are the scenarios under which there could be heightened volatility again. But X of that, I think all macroeconomic parameters indicate that there will not be any sharp correction anytime soon. So the strategy has to be to try and buy the stocks you like at whatever valuations you like and remain invested.
Well, let's just address some stocks that could be in focus today and look out for what Divi's actually does in trade. They've announced another agreement with a global pharma company to supply some advanced intermediaries. The capex investment is going to be about almost 6.5 to about 7.5 billion odd rupees, which is going to be funded through phased advances from the customer itself. So that's going to be one such stock which one should look out for. The fact that this is this company's second order win announcement this year so far itself, and we're just almost 6 months into the year, so that in itself is a great big news. Sandip, you've been tracking Divi's and Sun Pharma etc. very closely. Where is it that you're confident of adding to positions?
So in the near term, I believe Sun Pharma has some challenges related to additional spending they are doing this year and somewhat lower growth. So I think the stock will consolidate rather than seeing a significant rally from here on. On the other hand, I think in Divi's, there were some concerns about some molecule reducing from next year and that leading to a decline in profits. But on top of that, they have now been announcing new deals. So it could get balanced out. So I believe it remains in a decent position, but valuations are stretched at this point of time.
All right, so that's the take coming in on Divi's Lab, but let's also get you some stock picks by our experts. And Chandan, tell us which is the stock that you're tracking this morning.
Yeah, so I'll focus on SBI Life. We have noticed that most of the insurance companies have seen the consolidation breakout and heading towards the new trading territory. In fact, we have seen surge in the trading and the delivery volume, and the open interest activity also indicate the fresh leg of rally. So SBI Life on radar, it has given a decisive close near 1800 marks and a consolidation breakout of last almost 15 trading session. So expecting next leg of rally in the counter with support of 1750, it can head towards 1880 marks. Second trading area, that is buy on BHEL. Stock has been holding the immediate support near 240 zone and given a decisive close about 250 marks. Major trend of the counter is positive, has been moving upwards from last 3 months, heading to its key retracement zone led by short covering trigger and the coal unwinding at 250 strike. So BHEL can be bought with support of 249, and we have a target towards 267 in the counter.
All right, so those are the two buy calls coming in from Chandan. Well, of course, yes, the life insurance counters have been doing well, and let's.
Within metals, do you find strength, or would you say avoid right now?
Typically, I tend not to invest too much in commodity stocks, and that includes most of the metals. So although the outlook and results for a majority of the companies have been decent, but I am not investing in this segment at this point of time.
Ashok, Leyland came out with its numbers, and while UBS has maintained its buy, they've upped the target price as well, talking about strong earnings, growth in a down cycle, and the fact that they're predicting an upcycle ahead. JP Morgan, on the other hand, has downgraded the stock to a neutral versus the earlier overweight, although they've upped the target price to 255, and they believe that India's CV growth cycle could be headed for another year of low growth as the truck demand remains soft while bus growth could moderate. Sandip, there's been quite a bit of diversification within the entire auto pack, with CVs doing one thing, passenger vehicles within that as well. There's been quite a disconnect on what Maruti is and how you approach a Tata Motors, or what M&M has emerged to be as a very, very strong SUV player and dominant one in the market. And then Hyundai couldn't quite take off post its IPO. Help us analyze the entire four-wheeler space.
I think on the commercial vehicle side, the cycle has been on a moderate growth cycle or a downturn sort of. Now, in the coming year, the possibility of a positive surprise, I would say, is greater than that of a negative surprise, because one, as economic growth picks up, interest rates move down, it will definitely generate more economic activity and as such more demand for commercial vehicles. Companies like Ashok Leyland believe that the replacement cycle should now start playing out, although many analysts have a divided opinion on that. But that said, I think the trough seems to have been reached. So the possibility of growth surprising on the upside could be positive. On companies like Mahindra and Mahindra, obviously normal monsoons, etc., help them on the tractors, farm equipment side, and their utility vehicle segment as it is has been doing well. So I believe M&M should continue to do well. And overall, if the rural economic buoyancy comes in and accelerates, then it could help the two-wheelers also. But on the four-wheeler side, Hyundai has been losing market share because of lack of new models, etc. And that has helped some other companies actually gain market share, because at one point of time Hyundai was taking huge market share away from many of the other four-wheeler companies. I think Maruti, M&M should do well, and the dark horses could be the commercial vehicle companies.
Somil, you analyze the entire auto space for us, and let's throw in two-wheelers as well over here. What's looking like the strongest and the weakest play within autos?
I think the big players like Hero MotoCorp, Tata Motors, Bajaj Auto, all of these have been very silent and they've been not having much strength. However, the undertone definitely remains positive because it's been bouncing from a very crucial levels, crucial support levels for Tata Motors specifically, and Bajaj Auto as well. Hero MotoCorp did show some strength a few weeks back, but it's not giving hard top hard bottom formation with good strength, good volumes. There's no volumes there compared to the previous rallies. So I think still there is some time for these stocks to break out from these levels and these consolidation levels. However, Maruti looks great to me because it has, making higher tops, higher bottom formations, taking support at averages, and going up. So Maruti definitely looks great. M&M on the other side also looks great, but it may take some time for consolidation and then move up. The breakout levels for M&M would be around 3180, and once it crosses 3180, I think that would be a great time to buy M&M.
All right, so that's the take on the auto counters. But Sandeep, just wanted to have your take on Balak Krishna Industries as well, because that counter will be in focus as the company has announced their foray into the truck and bus radial tire as well as the passenger car segment. And off late, Sandeep, we know that Balak Krishna has a big presence in off-highway tires segment, and this is a new foray that they have announced to enter into the mass category. And Sandeep, the margins in this particular category is of course way below than what Balak Krishna holds, around 25% of the margins. The valuations are at a lower level. Do you believe this can have an impact on the stock price on the negative side as well? Because the company did come out with their 2030 outlook. Will that give confidence to the investors, or they will take this news negatively of their recent foray?
I think you have analyzed the entire business quite well. So they are in a high margin segment where they have reasonable market share and where entry barriers are high. They are entering into a segment where there are huge number of entrenched players. Creating a brand itself will take a long time. Getting entry into OEMs will be tougher, and then replacement market also will be tough for them, and it will require a lot of branding exercises, and margins obviously will be much lower. So on balance, it's a negative trigger in the near term for the valuations of the company as well as outlook.
All right, that's a negative. Let's watch out for Balak Krishna Industries. But with this, Saumil, we'll let you go on that. Thank you so much for taking the time out and speaking with us. So just a few minutes left for the markets to open, and well, of course, a lot of counters to be watched out for. But Chandan, if I can quickly have your take on NTPC, because that too is one of the earnings candidate. Give us some sense that what are the charts telling you?
So NTPC has been consolidating in a range from last 13-14 trading session with higher base. And in fact, on the weekly chart, the stock is completing a narrow range price pattern. So a small follow-up beyond 250 could open the fresh up move. But first of all, we need to look at the target towards 250. So as of now, buying interest could be seen with support of 338. Look for an upside target towards 245, and about 345, it can head towards 360. So final 360 can be target for upside in the counter.
All right, so let's watch out for NTPC. This time the company did report a profit figure. Other than that, there has been lower dividend income that has actually impacted the numbers, but the consolidated adjusted PAT did shot up around 27%. So let's watch out for this particular counter. Other earnings candidate, JSW Steel, will also be in focus. Ashok Leyland too. We'll talk with the management, as well as Concor is another counter that will react to its earnings after the management commentary. But Sandeep, off late, have you been liking the OMC's counter, because stocks like BPCL, HPCL, they are on the move?
So OMCs have had a move now. If the crude oil prices start moving up, or there's any fuel price cut, that could be a negative trigger. So I would think that at this point of time, the bullishness is built into the OMC stocks.
Okay, that's the take coming in on OMCs. But Sandeep, as well as Chandan, we'll let you guys go on that note. Thank you so much for your time. We're going to be addressing and...
If you like this video, then like, share and subscribe to ET Now.